All right, so taking a quick look at our daily report, no signals in channeling and overreaction, although in the primary indexes, although we have them in XLI, XLP, XLY. We've got channeling and overreaction for Coke, Caterpillar. We're going to take a look at Visa and AT&T. For 5 days down, we have UTX, Triple Screen and Disney, 551W patterns at Visa and AT&T, and then a boatload of auto framer candidates that include United Tech, McDonald's, Coke and Caterpillar, AT&T, Microsoft, Visa. So we're going to take a look at all those. We'll take a look at IWM as well. Next up is the tactical summaries, and you can see that we have a boatload of auto framer candidates. United Technologies was an RSI 2 value of 2 and is #1 on the max pain range compression and tests out at 8-to-1 on the auto framer and is a 5DD as well. So that's going to command our attention. Now McDonald's is nice because it was a % winner on Friday, but still tests out as #2 on the max pain range compression and 7.7 on the auto framer, and there's already 1 day of rebound in the bag, an outperformer in the Dow. So that's got to get our attention. Coca-Cola is a channeling and an overreaction. #3 on the max pain range compression. It tests out at 4.5-to-1. Boeing, Caterpillar, and GE are very froggy, and they test out well on the RSI 2. Caterpillar is a max pain and is also an overreaction and a short candidate, or overreaction and a channeling candidate. Cisco and Verizon keep up their winning ways. And then you can see just how well Intel has been doing. It has no signals at all, but if you take a look down here, it's been dramatically outperforming across the board. So we'll take a look at Intel. Nothing really to mention in the ETFs summary, the tactical summary. Most of the price action is in the Dow, so we're going to go straight to the auto framer and the regression line fractal framework as soon as that comes up on your screen. Okay, there we go. Sorry for the delay. Again, this is slow connection. You can see we've got a boatload of candidates here for the auto framer, starting with UTX is 8-to-1 and McDonald's 7.5-to-1. And just I cleaned up the formatting on the regression line fractal framework for you. Excuse me. So these that are in the top half, you'll notice that the risk-reward ratios are all positive. What that means is this is how far below their own regression line 270 these symbols are. So United Technologies is 7.5 ATR below its 270 period regression line. DuPont is 5.8, and General Electric is 4.1. McDonald's was 4.8. So these are the ones that are underperforming their long-term trend the most. And then the ones in the bottom row, in red here, these are the symbols that are the most advanced above their own regression line 270 in terms of ATR. And so these are your relative strength winners. This is how far they can fall to get back to their long-term fair value, which is we would define as the price at the regression line 270. All right, so Cisco is 8.63 ATR above its 270. Intel next at 7. Chevron, Verizon, and Goldman. And then you can see over here on the S&P 500 some of the symbols that are leading and are lagging. And so this is not only a way to frame respectable trades, but this is also a way to get a sense of where the relative strength in the market is. Okay, so let's take a look at the some of the other market mosaics before we get to charts of interest. Okay, here we go. So the 30-period regression line and that polynomial regression line are almost identical as the market is just kind of quietly grinding higher. It just popped below on the downside of the regression line. You can see that we had the regression line crossover. That's where the 30 crossed over its own 10-period moving average, one standard deviation above the 6-month normal. And now it's come right back exactly to the 6-month normal. It is now actually starting to go a little bit lower. You can see in a longer time series, this is that a 180-day time series look. And then the last chart of the mosaic here, percent stretch relative to the 200-day moving average. The 180-day average of that stretch is about 8%, so we're just a little bit below that. And you can see that we've just really been marking time with the 200-day. This last surge got us back above, and then another surge above, and we've just been basically paralleling the 200-day moving average. Now, that's a sloping upward line, so that's still a good thing. However, this is more like an aging bull than a young and raging bull. So we're well served to keep that in mind. Let's see. Okay, we're going to shift now to charts of interest. Okay, here we go. The first one I want to look at is UTX. So this one was a 5-day down candidate, and it's also an RLFF extreme condition. So this is why UTX is so interesting. It's at a critical state here at 108. The last time it was at 108. On the reversal, it got as high as 118. So a nice 10% move from here to here. And since it's now it's testing this double bottom, it's either going to fall an equivalent amount down, or it reverses here and starts moving back with a target of about 119 in the RL 270. So this is our price target up in here around the 119.5. And we would take an intermediate target of about 114.5 based on where the 90. Now we haven't seen the 10 turn yet, so we really want to see the 10 turn and get some favorable price action on the way up. If we wanted to look at this as in a candlestick chart, let's hold on a second. Let's see if we can get that done. There we go. Okay, here we are with UTX on a daily charts with candlesticks, and what you'll notice is that we've got this is a 5-day down pattern here. 5 days down. And it ends in a nice compressed little doji, so that's why this is the #1 max pain range compression. The 10-day high is up here around 116. You can see the regression line 270 up here at 119.20 on the far side of the floodplain. That's the limit of fair value, I would say, and is really the long-term fair value. But you can see that price is already decaying as the long-term guys are becoming more impressed with the failure that we've seen through here. So to auto frame this, we're looking for entries around a little north of 109 with a stop around 108, so about $1 of risk, and then a test of the 10-day high around 116.5. This is where you come in at about an 8-to-1 reward to risk ratio. You could also wait to see. This is a Z pattern, you'll notice, in the RLCO, pattern 7, P7 is the Z pattern. And we could afford to wait till the edge of the river, but not later than, the edge of the floodplain, but not later than the edge of the river, about 112, in which case we'd be looking for the Bollinger Band mean, which coincides with the 90, the far side of the river, and then the far side of the floodplain. So a lot to be said for UTX here, being in a critical state. Let's see if we can look back. If it fails here, if we want to be on board this rascal, and we definitely do, the next price level of support is down here around 107, 106, and then very long-term support at 103. You can see that UTX has been enjoying this ride on the way up, but this breakdown here, this breakthrough 114 looks decisive. The 90 is definitely sloping down. The river is down. The 270 is down. And so failure below 108.50 should activate the shorts on this one. So UTX is in a very critical state, which is favorable for short-term traders such as ourselves. Okay, let's do a quick shift now over and look at some channeling symbols in the indexes. We'll look at XLI first. You can see the channeling pattern here. Price testing a double bottom around 53.70. It's out here in the floodplain, so we're looking for targets at Bollinger Band mean, far side of the river, far side of the floodplain. And the 270 regression line, you can't even see that rascal. It puts the fair value up here around 56. Next up, let's see, it was XLP. So now we're looking at consumer staples. Now, consumer staples are in a slightly different condition because what we're seeing is prices come back and test and found support here at the 270. It's at its long-term fair value. The last time it was at that fair value was back here and back here. And each time there was a corresponding price move. In this case, it went from 44.40 to 45.40, so about a 3% gain. So in this case, if we get a rebound here, we'd be looking at it coming back around the 90 period regression line at far side of the river. That's what that channeling signal is looking for in the usual way. We'll take a look at XLY next. And XLY is about in the same boat, but you'll notice that now his price is on the wrong side of the 270, but the 270 is still slightly up. This is a little discouraging that it fell through its PSAR and that the slope of that channel is down. So I'm not in a hurry to buy that one, although it would tell you that 67.60 would be the fair value target on this one on a rebound. All right, let's take a look at Caterpillar next. So Caterpillar is suffering after this one-day big gap down from Thursday. Had a white candle, and it held support here at 104, but we've got a P7 pattern in RLCO where we'd be looking at buying around 105 3/4 with initial targets at edge of the river at this intersection of the RL270, the Bollinger Band mean, and the Dragon. So that's really fair. That's what fair value ought to be estimated at. But again, failure below 103.75, I think we're going to see is an interesting short. Yes, it is. And what we would say is target around 101.50 if that should fail. Okay, so that's Caterpillar. It's in a vulnerable position, but feasible. Next, we're going to look at Visa and AT&T. Okay, another big system shock in Visa with this large gap from 223 down to 214. Fair value seems to be about 223. I'd be inclined to buy the overreaction rebound with a relatively tight stop and look for edge of the river, and then the RL270 on the upside. Support here at 213. The next target would be around 208. So that's about $5. If you can manage about a $2 risk, there is a trade to be framed in the southern direction as well. So I would count Visa in the critical state condition. Next up, AT&T. AT&T is about 1 day ahead of Visa, in that it Visa had its sell-off on Thursday, and we've already got 1 day of price data on AT&T. It held support at the real body and is still above its 270 regression line. The river is sloping up, and we could target the far side of the river, and then the far side of the floodplain as reasonable price targets. On the downside, if it fails here, it really has to fail below about 35.20, in which case it's down to 34.80 in the 270 regression line. And if that fails, definitely look out below as it violates the support levels. Still, that makes for an interesting trade frame there in AT&T. We want to look at Microsoft next. Microsoft looks very good. It's made an orderly pullback after this little bit of topping action up here. It's had an orderly pullback, 1 day of recovery. That's why it's a 551W, and it's still, if it finds support there, then it found support above the edge of the river. That'd be very favorable. Found support in the dragon. That's favorable. And then if it can get above 45.75. Then it's free and clear. Off we go. Let's take a look at the RLFF on that one now. All right, so what we have here is the, this is how far above the 270 regression line Microsoft has managed in this last little burst. And so if it fails here, say fails through the 30, then we'd be looking for a return to 42.50, or about a 5 or 6% haircut. But then if it can get above about 45, then it's off to the races. So a critical state in Microsoft. You can frame a favorable reward to risk ratio in either direction. That makes it a good trading candidate. Last one we're going to look at is McDonald's. I'm sorry, Coca-Cola. Let's look at Coke while we're here. Very nice. I don't even see the 270 on this one. And let's see if we can't expand that out a little bit. There we are. So it's recovered most of its distance back to the 270. But it's been above that for this entire run-up. So if it can actually find support here at this 41, then getting back to 42.50 is certainly within reason, and that's only with a 50-cent stop loss, which would be below the noise level on the regression line. So it's sort of a perfect storm of support. So McDonald's looks pretty interesting. Okay, that's everything I wanted to cover. Unless you guys have some specific questions, we'll get this recorded and posted for the additional trade frames. I would invite you to think about the workshop we intend to have in November. Groups of 3 working specifically on trade practice, improving our professional management of the intraday and the swing trade frames. This is going to be less discretionary on the research for this, and we'll save that for the summer. This one I feel a need to really focus on technique, finding good candidates, framing them properly, managing the trades while reading the market, using good process improvement techniques to refine our trading practice, and then doing that in a supportive environment with accountability partners. So I really think that's where we need to be in November. And so to participate in that, I'm looking for 100 forward trades with accountability partners. I think I would be open to the possibility of doing some remote work on that too if you can't attend, but would like to participate in that. I think we might be able to do some kind of webinar-based workshop for that, save you some travel money. But I'm getting pretty excited about the possibility of working in accountability trios. I think we're ready to move to that next level based on a lot of the crosstalk that I'm seeing in the chat room, and so I would invite you to consider that, and come on out, eat some championship barbecue, and watch the girls play soccer and hit the drums a little bit. So that's everything I got for tonight. We'll see you in the chat room. I'm going to post some trade frames in the chat room later, but I got another webinar to do tonight. So take good care, and we'll see you in the room.